Good afternoon, grade 12s. Welcome to our business studies class. Today, grade 12s will be looking at investment, particularly on securities. Now, this is your part one of this chapter, and this is an important chapter in your grade 12 syllabus. You'll be asked this chapter now and then. For those who have just joined us today, welcome to our 15th lesson. My name is Hector S. Ngosi. All right. All right, grade 12s. I want to go through this. So basically, boys and girls, the other day we touched on the learning outcomes of this chapter and stuff. And we did some definitions also on this chapter. However, today I want us to scrutinize or to check more on JSE, of which is your Johannesburg Stock Exchange. All right, grade 12s, let me make sure that I've got my marker with me, my highlighter. Okay, I do have my highlighter. All right, so basically, boys and girls, we did have a look on this one where we checked what the investment is, the JSE, what a share is, your capital markets or security markets, your short-term investments, your long-term investments, the fixed rate, your accumulated, simple interest and compound interest. And we also looked at the risk. Now, grade 12s, today I want us to look at the functions of your Johannesburg Stock Exchange. So we did highlight on your JSE the other day, but today I want us to look at their functions one by one. Now, grade 12s. So the functions of the JSE is it gives opportunity to financial institutions such as insurance companies to invest their funds in shares, basically. Remember now, guys, one of the requirements from your public companies is that their shares must be listed on the JSE. So now your JSE also gives an opportunity to financial institutions such as like your insurance companies to invest their funds in shares. Also, it serves as a barometer or indicator of economic condition in South Africa. So it is a main indicator that helps us to see the economic condition here in our country in South Africa. It keeps investors informed on a share prices by publishing the share prices daily. So now it keeps investors. So now if you're an investor of a certain company, you'd know that, okay, what is the value of those shares currently in the market, or if those shares, do they fluctuate or not, the share prices. Also, it acts as a link between investors and public companies, very important. So your Johannesburg Stock Exchange or Security Exchange basically acts as a link between investors and public companies. Remember, only public companies can be listed on your JSE. And also remember now that if your company is listed on your JSE, which means it can issue shares, it can use shares as one of its capital. Shares are valued and assessed by experts. So we know that shares are being valued and assessed by experts. Small investors are invited to take part of the economy of the country through buying or selling the shares, right? Also, boys and girls, the venture capital market is made available on the open market. The orderly market for securities serves as a disciplined market for securities, which it encourages new investments and mobilizes the funds of insurance companies and other institutions. It raises capital, primary capital. Also, it regulates the market for dealing with shares. Also, under JSE, boys and girls, is that it plans, reaches, and advises on investment possibilities. The other thing that you need to look at also when it comes to this is that it ensures the market operates in a transparent manner. Very important. Very important, isn't it? So the JSE, basically, boys and girls, it helps us, or it gives us the assurance that the market, let's say it's the market operates in a transparent manner, meaning that everyone can see how much your shares are trading at. So nothing has been hidden, everything is transparent. That's another function of your JSE. Okay. Then it provides protection for investors. It encourages short-term investments. Also, it facilitates electronic trading of shares or strata. Now, I'm still going to explain what strata is later this week. And also, don't forget grade 12 start. Actually, we are doing a revision. Okay, we did the revision tomorrow, yesterday. Then I'm hoping that you have started to write your informal task that was sent to you. So please do it and do it thoroughly so that when we mark on Thursday, everything is just going to be fruitful. All right, let's look at the next point. Now, I want us to look at the factors that should be considered when making investment decisions. Now, these are the factors that you need to know, boys and girls, when you looking at your investment decisions. You must know that, okay, what is the return of the investment? Meaning, if you want to invest 600, how much back are you going to get? What is the risk in that investment? You need to look at the risk of what are the things that are going to be danger to you. Also, investments term or period. How long? Are you investing for 250 days? Are you investing for 365 days? Are you investing for 6 months? Are you only investing for 3 years? Does it make sense? So we must know the investment term or period. Also, we must look at the inflation rate at that point in time. We must look at also your taxation. Also, we must look at the liquidity, how liquid you are, or how liquid the business is, or how liquid the company is before you can invest. The personal budget, it's very important for us to have our personal budget. Your investment planning factors, your volatility or fluctuations on investment market. Those are also your important points. All right. Now, we need to be able also to explain one of these factors. So we're going to start with return on investment. This is the first one that we're going to start with. Now, grade 12s. When you speak about your return on investment, it refers to an income from investment, namely interest, dividends, increased capital growth on the original amount invested. So it's interest, dividends, or increased capital growth. Now, I want to give you 30 seconds or a minute to tell me that which funds or which investments that will give you interest, which investments that will give you dividends, and which investment that will give you your capital growth. Right? You can raise up your hands if you want. I can unmute you for me to tell me your answer, or you can send your queries here in the chat box. All right, your time starts now. All right, grade 12s, your minute is over. So let's hear. Right. Anyone who wants to try? All right. Sure, majority of you are shy. But let me help you, grade 12s. So basically, you can get an interest when, let's say, you want to save money at the bank. Let's say you want to take 10,000 and put it to the bank so that you can get an interest at the end of its maturity term. Dividends. Remember dividends, if you invest in shares, in return, they'll pay you dividends. Then your increase in capital growth, also the same thing. But this one doesn't have to do with shares. Now, grade 12s, a higher risk investments yield higher return. So the higher you invest, the higher returns. Generally, there will be a direct link between risk and return. The return should be expressed as a net after-tax gains on investment. Returns can be in a form of capital gains, where the asset appreciates in value over time. Also, and that was your return on investment. Now, grade 12s. Let's look at risk, isn't it? Let's look at risk. Do you agree with me that now with a risk, basically, we want to see how bad it is, right? That's the risk. For example, everyone takes a risk. There's different risks that we do as people and also as adults. Now, sometimes you can go out to the supermarket, you've worn your mask, but you are going out. And you know very well that you're not well, health-wise. And since we're facing this corona, now, when you go there, boys and girls, to the store or to any supermarket, do you agree with me that you are taking a risk with your life? Because you don't know whether you're going to catch corona or not. So also that thing, it's a risk on its own. Now, shares have low or medium risk over a longer investment period. So we know that shares, they've got a low or medium risk. So meaning that the risk for shares, it's not that high. Also, shares with high risk have a greater potential for higher returns. So the higher risk, the higher returns. Right. Isn't it? Then when you look at your ordinary shares, you have the highest risk as the investor may lose the full or part of the investment when the company is dissolved or bankrupt or liquidated. The preference shareholders' risks is lower as they have preferential claims on the assets of the liquidated company or may receive some compensation before ordinary shares. The share price are linked to factors that investors cannot control. So investors cannot control the share price. e.g., economic conditions, operational success of the company. Share prices are volatile, unstable, unpredictable, may increase, decrease sharply within hours, which contributes to the uncertainty of the value of the investment in the shares of the short term. Now, let's look at the investment period. Remember now that your investment period is the duration of what or of how long are you going to keep your funds or your investments. As they say here in bullet number 1, that this refers to the duration of the investment, which may influence the return on investment. The longer the investment period, the higher the returns. The investment period will depend on an investor's personal needs. Hope you're following. This is easy and straightforward. Short-term investment enables investors to access their money on a short period if needed. The investment period can be short, medium, or long, depending on investors' needs. Very important also, grade 12s. Remember that now, the investment that you do, it can be a long-term investment or a short-term investment. Now let's speak about the inflation rate. People are affected by a high inflation rate because their money or purchasing power decreases. Remember, what is an inflation rate? Inflation rate is the increase in prices. All right. Now, bullet number 2 says to you, grade 12s, the return on investment should be higher than the inflation rate. Very good. Very important point. Now, let's unpack this statement where it says return on investment must be higher than the inflation rate. Guys, you cannot invest something that is below your inflation rate. So you need to look at your inflation rate at that point in time and see on whether is it at par as what you are willing to invest or not. Very important, right? So please make sure. I know some of us at home, we've got businesses and stuff, but you can actually use these skills, guys, to enhance your mom's business, to enhance your granny's business, to enhance your dad's business or whoever business it is. Because now, by the end of next year, you are going to be business studies experts. Even though you're not willing to go study business studies, but you need these skills going forward. The last bullet now is inflation has a positive effect on some investments, such as property or shares, where the income will increase as inflation increases. Right. Okay. Sorry about that. It was a technical issue. I don't know what was happening with my speaker. Now, let's look at our personal budgets now. Remember, guys, a budget is a forecast, it's an estimation on what you are going to expect or on what you are going to use at the end of the year. So investors can determine the amount of surplus money that can be invested. Also, investors must budget for unforeseen costs. So it's a must. So this does not apply to businesses, but it also applies to us as individuals. But also to businesses, it was very good to open what? Trust funds and stuff like that. And I think this corona was a blessing in disguise because now they are paying people. All right. Investors must budget for unforeseen circumstances or costs. Budget should provide for a contingency plans, investments, or savings. All right. Today, boys and girls, will end here under personal budgets. Tomorrow, we'll finish from liquidity, taxation, and the investment planning factor. Please, please, please make sure, boys and girls, that the informal test that was sent to you, please go check for me if you've received that paper or not. That test, guys, we'll revise it on Thursday. So on Thursday, we'll be doing the corrections for that test. So it is your own responsibility to attempt it so that when we mark, everything will be so much will make so much sense, right? Thank you so much, guys. Thanks for tuning in. And from my side, I said goodbye.